Let's expand this out a little bit more broadly into retail sales. We had that remarkably disappointing number in December that some people even question whether it's a good number. We get reports like this out of Macy's. What does it say to us, if anything, of the state of the retail consumer?
Sure. I mean, I wouldn't read too much into department store results in terms of understanding the U.S. consumer, because department stores are obviously facing a number of kind of more secular headwinds at this point, including share shifts to e-commerce, right? So I would say more broadly, we question the retail sales number as well. Those kind of declines that we saw, we hadn't seen since 2009. So, given the positive consumer fundamentals that we see, the support of the strong labor market, the fact that retailers are still hiring above trend, that didn't really seem to foot with the strong backdrop for the U.S. consumer that we see right now.
But broaden it out in terms of then what it says about earnings, as in, like I just mentioned, that Macy's was down 18% into the print, and the stock is kind of all over the place. As in, like, if it's not terrible, but like investors thought it was terrible, it's okay and it's actually better, which is very different than what we saw in third quarter reporting season.
Right. So I mean, the reaction all depends on kind of what's priced in going into the print. Macy's had pre-announced some bad news already, and I think these headwinds facing department stores are pretty well known at this point. So I think it's all about investors just, monitoring the space and seeing are results better or worse than expected. But again, I would not read through too much into what this means about the health of the consumer.